Okay, in this video series, I'm going to be talking about what is market structure. Okay, so we're going to take this, or I'm going to explain this. I'm going to break it down from the very basics. And then as the series goes on, we're going to start to dive into a little bit more of complicated subjects or complicated ways to use market structure and how you can trade it. Okay, so again, in this video, it's just going to be the basic definitions of what market structure is. So basically, what is bullish market structure? Like, what's the criteria when something is operating within a bullish market structure? Well, put simply, it's something that's it's consistently making new highs. So just kind of imagine with me for a second that this is a price chart. All right, so price is like trending up, it's trending up, it's trending up, it's trending up, and boom. So we're putting in consistent higher lows, so we're consistently making new highs. This is something that would be operating within a bullish market structure, okay? So that is what we would call bullish market structure. Now, bearish market structure is just the exact opposite, okay? It's something that's consistently making new lows, putting in lower highs. Again, it's putting in lower highs. See these little peaks right here? These are your lower highs. So just imagine with me for a second that this is a price chart and price is just consistently getting beat up. It's getting beat up, it's getting beat up, and boom. So that is basically what it is. A bullish market structure, consistent higher lows, it's consistently making new highs. Bearish market structure, making consistent lows, it's making lower highs, or it's making lower highs. Okay, so right now we're looking at a chart of AUD USD. So we got a real price chart now, and so you can see right here, I want you to kind of just follow my cursor. I want your eyes to follow my cursor. Okay, so you see right here, we're consistently trending lower. We're consistently trending lower. We're consistently trending lower. Price continues to break these new lows. It continues to break the lows. You see right there, boom, boom, boom. It's consistently putting in lower highs as well. Like this, lower high, lower high, lower high, lower high. So it's consistently trending lower, breaking new lows, putting in lower highs. That's a real chart example of bearish market structure. Okay. And then boom, right here, what happens? Price changes. It changes, and now it's operating within a bullish market structure. Follow my cursor again. So you can see it's consistently putting in low or higher lows, higher lows, higher lows, higher lows, higher lows. And it's consistently breaking new highs, breaking new highs, breaking new highs, breaking new highs, breaking new highs. Okay. So that is bearish market structure, bullish market structure. Okay. Well, actually, let's go over one more example here. All right, you can see Euro USD. Euro USD is currently operating within a bullish market structure at the time that I'm making this video. So you can see it's consistently doing what? It's consistently making new highs. There's a high. See how it took that out? There's a high. See how it took that out? So it keeps tagging these highs. It keeps taking out the buy stops that are resting above each of these highs. Consistently grinding up higher. It's consistently putting in higher lows. So you see right here, there's a low that was... When I say low, that's like when price pulls back. See that? Puts in a low, and then when it comes up higher, it breaks a new high, it pulls back, and that next low, the next time around, it's higher than the previous low. So then it breaks a new high. That next low is it's higher than the previous low. So basically the lows of these pullbacks in price, pull back, pull back, pull back. Each of these lows are higher than the previous lows. That represents bullish market structure. Okay, price is consistently grinding up higher. It's consistently tagging these highs that are made from the beginning of the pullback. Started right here. That's that swing high level. It tags it. Okay, so it's doing that consistently. That's bullish market structure. And then again, bearish market structure is just the opposite of that. Okay, it's consistently breaking new lows. Like if we just look to our left, you can see bearish market structure all day on Euro USD. So you can see it's consistently breaking these lows, broke that low. And then you had a really big sell-off. It put in a new low right here. It pulled back a little bit. And then it put in a high. So it's making, see this? This is a lower high. It's lower than this high. The previous high from that move lower. Okay. And then it comes lower. It tags that low. Now, it probably looks a lot cleaner on the weekly chart. Yeah, you can see it does look a lot cleaner on the weekly chart, a little bit easier to read. So you can see you got your lower high right here. And then it trades lower. It attacks that low. It keeps attacking the lows. It attacks, because remember, we're on a weekly chart now. It attacks that weekly low, boom. Attacks that weekly low, boom. And remember, what's resting underneath of each of these lows? Sell stop, sell side liquidity. And then boom, it attacks that low. You get a pullback. And this is key. Note this pullback. Note the high that was formed here. Note how it is lower. Note how it is lower than that previous high. Okay. Because remember, bearish market structure is consistently putting in lower highs, and it is consistently breaking new lows. Like right here, there's a low, boom, breaks it, puts in a lower high, boom, breaks a new low, puts in a lower high, boom, breaks a new low. Okay, so that's all we're going to cover in this video. I just kind of wanted to go over the basics of it with you. And yeah, so, and the next video, I think what we're going to go over is how you can, when does that switch happen? So when does that switch, when does that shift happen? So like, for example, when do we go from a bearish market structure, and when do we make that switch? What's the criteria? What do we look for to see when it has made that switch to, say, a bullish market structure, for example, and vice versa?